Thanks for joining us. I'm Marlon Bowling, your tour guide to the ag commodities. Always a treat to get to talk with you about what's going on in the ag commodity markets, even if they're not really very positive. I want to bring up the overnight trade for you on the Globex trade, and we'll go to the corn board here first, and I'll show you what I'm talking about. On the corn, wow, a lot of pressure. July corn down 11 1/4 overnight at 756 3/4. And even that was 4 cents off of its earlier low from last night. Now, admittedly, most of your volume is now being rolled out into deferred contracts. The July contracts going to delivery next week here. So September corn was down 17 3/4, and look at all the deferreds. December on out, 20 cents lower in the overnight trade. And we'll be talking in just a second with Brian Hoops of Midwest Market Solutions about all this here. But man, it's like the trade thinks the crop is made already or something. Let's talk about soybeans for a second. Overnight, with our quotes provided by Bar Chart, you had July soybeans dropping 37 cents at 16.15 3/4. August down 33 3/4 cents at 15.30 1/4. November down 33 at 14.43 1/2. Remember those 15 and 16 and $17 prices? Whatever happened to those? Well, let's take a look at the wheat market. And in Chicago, wheat overnight, July was down 14 1/2 cents. September down 15 1/2 cents at 9.73 1/4. In the Kansas City market, we have the July down 20 1/2 overnight, and September down 20 1/4 at 10.25 1/2. Ouch. In spring wheat trade in Minneapolis, July down 16 cents and September down 15 3/4 at 10.90. Both contracts are priced at 10.90. Cotton market overnight, well, here you had the July contract down 141 points. Look at October going down 700 points overnight. Man, they are just battering the heck out of the cotton market this week. December, the new crop month, was down 415 points at 103.92. Let's go back to Brian Hoops and talk about all this in the overnight trade. Wow, a lot of follow-through selling here, and it just seems like it's like trying to catch a falling knife here in the grain market this week. What is going on?
Good morning, Marlon. Yeah, it's it's a massive liquidation phase. It has kind of started in the crude oil markets where we dropped sharply last week, and it's spilled over into the grains. You talked about cotton getting hammered this week. There's just a ton of commodity markets just getting steamrolled this week, and part of that is because the higher U.S. dollar is forcing some liquidation in some of these grain markets. But I think we maybe underestimated this spring that we weren't only just trading fundamentals, but we were trading that inflationary type gains in these markets, and they rallied accordingly. We had cotton markets surging to multi-year highs. We had the grain markets surging as well, and now we're starting to pull back here, and maybe we're getting back to more normalized trading. But it feels like it's certainly overdone. It's a small door to liquidate out of when you're some of these really large fund type traders. So have we fallen to an area that's going to be a rock solid support and we're going to bounce out of here? I don't know that that's the case. We blew through some 682 support on the December corn last night. Now we're looking at 655, 665 as the area of support, but really it's going to be tied to when this liquidation phase starts to slow, and if we can heal some of these charts to take another run back to the plus side. Weather forecasts really have not added a lot of moisture for this week or even next week with that cold front, but you go out into the little bit longer term, a week from now to into the 10 to 14 day time frame, that's when they start adding some moisture, which would be beneficial to the crop, especially the soybean market. But we've seen a lot of selling coming out of China as well. I don't want to forget what's happening across the seas. That soybean futures, soybean meal futures, Malaysian palm oil, all taking a lot of selling pressure, and I think that's spilled over into the grain markets this week as well.
Okay, and one thing I did notice that the corn, soybeans, and the wheat all crossed or broke through their 100-day moving average support yesterday or the day before even, and this week all of them have taken it out, which is technically pretty concerning for a lot of folks. Well, we'll pause right here, and then we'll come back and we'll talk more with Brian Hoops about our livestock trade, some of the other stuff too, when we come back. Thank you so much again for joining us today. And just a reminder, now this is Thursday, and normally we would be covering export sales today, but well, not this week because Monday was a holiday, a legal holiday. So all those weekly reports are shoved back a day. We'll get those tomorrow morning, we think. We're talking with Brian Hoops. He's with Midwest Market Solutions. And one of those reports that gets shoved back a day is always the ethanol production report. And Brian, you said you got some information on that just a short time ago.
Yeah, right. They're having some sort of a technical issue. So the weekly EIA report that comes out 9:30 a.m. Central Time will be delayed, and they have not given a notice of when it will be released. So it's they're having some sort of technical problems. As soon as possible is what they've said as far as the release. Whether that's today, tomorrow, we don't know at this time.
And let the conspiracy theories abound. Here we go again. All right, Brian, but I appreciate you passing that along. We'll have to wait and see when it does come out, if it does at all today. I want to take a look at the Dow overnight just to get everybody caught up on what's been going on there. On the Dow Jones Industrial Average Futures, let's take a look at this big board here. And the last quote we had was 30,590 on the September futures, which would be up 119 points. On the U.S. dollar index, boy, that dollar has been flying high recently, over 104, and now it's at 104.165 on the September, and that would be up 184 points. And Brian was talking earlier about the West Texas Intermediate crude oil market. Well, it's kind of tame overnight, but it's almost on the high of the overnight trade here. August is now 39 cents higher at 106.58. That doesn't tell the whole story. It got as low as 102.32. before it bounced over $4 off of that, and now we're almost on the high here of the morning trade. Brian, yesterday when we closed up the live cattle market, we were down with significant pressure. We had August down $1.32 on the close yesterday, and the feeder cattle market actually closed lower with August down $2.15 at 173.15. Now this is even with a struggling corn market. So with the cattle trade under a little pressure here, what is that telling you? It looks like we had a little cash trade too.
Yeah, interesting cash markets. Northern trade, we're seeing a dress basis at least $4 higher, up to $2.39, and live trade at $1.45. But in the South, you have a disparity. We've seen $1.37 to $1.38 trade on a live basis. So a big difference between the North and the South, and that's pretty uncommon. I do think the futures want to try and rally a little bit in here. We kind of overdid it to the downside yesterday, and I could see a rebound in here. You would like to assume that logic would make sense, that corn being under pressure again, that would help feeder cattle, and the stock market would help live cattle rally. We've had a big week of slaughter again this week, which does put a little pressure against our cutout values, but it was noted to me this morning that choice cutouts anyway, for this time of year of June, the second highest on record, select is the third highest on record for this week in June. So it's not like our cutout values are really struggling, even though they are down this week for the most part because of the big slaughter pace.
Now that's interesting. I'm glad you pointed that out. Lean hogs yesterday, we closed them up with the August contract. I should say they closed down, actually. August was down $1.47 at 108.32, and that'll be our starting point for today. Brian, thank you for talking with us. Brian Hoops of Midwest Market Solutions. So Janet will get underway in just a few minutes. Here we go.